This is Eric Mother with Mother.com with another quick educational video here as we see US markets pulling back as of May 11th, 2021. Let's take a look at a stock here that is also reflecting the same type of sentiment. And we can see here NCLH. Now, notice this area here where this seems to be resistance and now we are pulling back. And from a technical standpoint, I would like to answer why it has been showing this resistance based on the RSI. Now, by the way, let me not throw away a good opportunity for a good lesson here. Take a look at this recent break on the daily. This is a daily, 1 year daily. We break here on the RSI. We come off the 52-week highs there. We take that information, draw our uniformity line, an original concept by yours truly, and we can see from a swing trade perspective, this is where this instrument has been struggling in April and now in early May. Now, I should also preface by saying that for there to be a substantial sell-off, it's going to have to break the RSI lows line. And of course, it is threatening at this very moment to do so. So from a swing trade perspective, this high was reflected there. This high was reflected here. Keep in mind this red line happens to be at RSI 61.8, where a lot of decisions are made by trading instruments. Take a look at the weekly, and again the weekly of course reflecting that slow grinding resistance. It's taken many months and now pointing down. Another way of saying this is this area has been a breakout area that I bet many traders who are watching this for a potential breakout, which would have been valid if it broke out and sustained levels above this area. So this would have been a valid breakout, but it never happened. In fact, we can see clearly that this has been rejected on multiple occasions, even when the opportunity was presented. So that in itself, the failed breakout, was a sign of an instrument that was looking unhealthy. Also, we can see that if we take the recent weekly closing low, we are approaching a break of this area. So there's a lot of data on this chart, lots of data. But if we break this recent weekly low from the month of March, be on the lookout for prices to continue reflecting this downward movement. Expect a big down week should we break below RSI 50 on the weekly. As I say, there's a lot of information on each of these charts, so we can only pick and choose some areas to discuss here. Otherwise, you can write several books on this one simple chart. If we take this RSI level here, this break coming into early 2020, that break there, the prices there at about 60. Take that break point, extend it out as such. Now, this is not me doing this. The market chose to do this, but we can see resistance here. weekly closing highs there. Multiple resistances on this area. And even here, double top. This being a weekly chart, this takes weeks to play out. And again, we can see it's been showing resistance on all of this area. Remember, again, from a generic standpoint, stocks tend to behave with a bearish bias when the RSI is generally below 50. When the RSI is generally above 50, tends to be sideways to bullish. So the question is it going to maintain levels above 50 or is it going to crack below 50? Now, for the main reason for this video, I would like to explain from my personal point of view why there seems to be some resistance here. Take the RSI topside line and you can go all the way back to the highs of the RSI from late 2014. This is all data monthly, and this chart by itself, if you pay attention to the monthly chart, was suggesting that there was some resistance there. Now, just because it was resistance and is resistance doesn't mean that at some point it cannot break out. Of course it can, If it breaks out, that's going to be a fresh buy signal, indicating prices have a probability of going higher. But what we are faced with in the here and now is resistance. It is also RSI 50, uniform activity rejection. In a sense, we can also say this was uniform activity above 50, back below it with uniform action for the highs there. Now there's another line that confirms that this is and has been and continues to be an area for struggle, challenging area. In other words, if I extend this line this way, it's a simple RSI lows line going back from the lows 2016 and the lows of late 2018. We see that once we broke below this blue line, we had some fun movement to the downside, and now this blue line has been rejected twice. Hence, it continues to indicate that the risk here is for lower prices. Now, believe it or not, whenever you see RSI 50 rejection, and let's say we are unable to clear this black line, the previous and the current RSI highs line, the fact that we've been rejected at the monthly RSI level, in fact, a double top here. Let me remove that stuff. So because the RSI is being rejected below 50, what this means is chances of taking out the monthly closing low from early 2020 are now back in play. That's what it means. So again, the RSI would have to correct this look by moving above 50. Otherwise, now that it is turning down and showing RSI 50 rejection, as you can see, because it is showing RSI 50 rejection, what that means is now the probability and the opportunity to test recent monthly closing lows or intraday lows is now back on the table. And so it is. Eric Muathe with Muathe.com. Love, light, light, love. Namaste.